Chapter 5, Financial Plans. Budgets. Budgets are usually created with a specific goal in mind, whether it's to cut down your living expenses, to increase savings, or to save for a specific goal such as buying property, funding your education, or saving up for retirement. A budget provides an actual plan for meeting these goals. It's more a document of action than of reflection like financial statements do. As an action statement, a budget is meant to be dynamic, a reconciliation of facts on the ground and castles in the air, or rather a reconciliation of what's actually happening in your everyday life and your dreams and goals. We previously learned about financial statements, which are summaries of what has already happened and is sunk. In this chapter, we're learning about budgets, which reflect the current realities that define the next choices that we make. A budget shouldn't just be followed, but should constantly be revised or updated to reflect new information as it comes in. Here are some elements of a successful budget according to the balance. Having regular reviews of your budget, having accurate spending categories. And you'll know how accurate you are if your variances are small between what you budgeted for versus what actually happened. The same goes for accurate income projections. So knowing how much money is going to come in each month. Having categories for irregular expenses so that they don't surprise you suddenly, like a car insurance payment. And having a line item for savings, because savings is so important. Now, you also want to make sure to track for cash purchases. Sometimes it's easy when you have cash in your wallet to not pay attention as you're spending it and then not account for it in your budget. So whether you're using credit cards or debit cards or cash, you want to be able to track all of that. Now, a budget is a financial plan for the future, and the budget process is an ongoing loop similar to the larger financial planning process we learned about in Chapter 1. It first starts with defining goals and gathering data to know what it takes to fulfill those goals. Next is forming expectations where you'll reconcile the goals you have in mind and the data you have at hand. From there, you can go ahead and create a budget. And as you move forward with your budget, you'll want to monitor your outcomes and analyze what differences or variances are actually happening between your budget and what you're really spending and earning. As needed, you'll adjust that budget. You might adjust your expectations, or you may even have to adjust your goals. And from there, the loop begins again. Reviewing your financial statements or your current financial condition, as well as looking at your ideas about how you are and could be living your lifestyle, will help you identify immediate and longer-term goals. If your goal is to buy a car, your budget should be set up in a way that will allow you to save up for that car. Now, creating a budget involves projecting realistic behaviors and expectations. Being aware of your tendencies when it comes to spending and saving can help you recognize what changes in behavior is needed. These adjustments is what is going to close the gap between reality and your dreams and goals. So if you notice that you have a tendency to go out to eat rather than cooking at home, that is a recognition of, well, what change can I make that's reasonable? Maybe I still want to go out to eat, especially for social events and settings. But if it's just me, can I make a sandwich or a meal for just myself and then save on that? Another common one that comes up as like a possible behavioral change is coffee. That's something I did. I used to buy cups of coffee from Starbucks all the time, and it was not cheap. And then, nowadays a cup of coffee can be easily $6 or $7. So I had to adjust my behavior, and now I make coffee at home, and I only treat myself to a Starbucks drink once in a while. So a budget is really a projection of how things should work out, but there's always some uncertainty. If what actually happens is better than you planned, you can adjust upward. That's great. But if what actually happens is worse than you expected or planned, you'll have to adjust your budget and change some lifestyle behaviors. Now, to avoid unwelcome adjustments, you should be conservative in your expectations. That means you'll want to underestimate the income you expect while also overestimating your costs or living expenses. And when it comes to creating that budget, you have to also decide the time period and how often to budget. When I was in college, I did an annual budget to get a fuller picture of all my costs and incomes for the entire year, which would help me see things that don't happen like on a monthly basis, but maybe every 6 months or every quarter or 3 months that something was occurring. And then that would allow me to then create a monthly budget that was kind of smoothed out throughout the year. A comprehensive budget is one that covers all aspects of financial life and includes a projection of reoccurring incomes and expenses and of non-recurring expenditures. So recurring income would be earnings like your weekly or monthly paycheck, and recurring expenditures are things like living expenses like your cell phone bill every month, or how much money you're setting aside regularly on a monthly basis for savings, or perhaps monthly investment deposits. So I invest monthly portion of my paycheck, so I can't touch it. Now, non-recurring expenditures are one-off events like buying a new car or buying a home. Thus, when it comes to creating your comprehensive budget, we are essentially putting together the operating budget, which has the reoccurring income and expenses. So there's my living income and expenses, if I've got any loan payments, the savings and investment deposits, and combining it with our capital budget. So these are the non-reoccurring items. So those things that we're buying, like a car or a home, for instance. And with our operating budget over here, these are going to be where our short-term goals exist that involve these reoccurring items. And then the capital budget is where our long-term goals sit, and those involve non-recurring items. When creating our projected operating budget, it's helpful to take a look at three major components. The first is our financial history. So those come from our financial statements. That's helpful to give us a more accurate picture of where our expenses and incomes tend to be. Next is the micro factors or new information. So recall the micro factors are the personal or micro characteristics of your situation. And these influence your expectations, and they change from time to time. And this could be family structure, your health, your career choice, and your age, all of which significantly influence your financial choices and goals. If any of these factors is expected to change, your financial situation will change as well. And that expectation should be included in your budget projections. So right now, you might be thinking about, what are your academic goals? What kind of school do you want to go to? Because those will have different costs. But to know which school you want to go to, you first want to think about what career options you want to explore, because some schools are better suited for certain career paths. And so all of these connect together. And as you get more information, as you do research on colleges, on career paths, talk to people, those will impact your decisions and your budget projections. Now, in terms of macro factors, this is the wider economy, what's going on with unemployment rates, inflation, or deflation. And for that kind of information, you can do research online or simply follow the news. I like to listen to NPR to hear what's happening in the world. When I was thinking about which majors I wanted to do in college and which careers, I explored and looked around at where the demand was for certain jobs, were companies hiring, and in what areas. And that helped me to understand what was going on at a macro level, so then I could make decisions at the micro level that align with my skills and my strengths. Note that the economy tends to be cyclical. There's going to be times where the economy is doing really well and other times when the economy isn't doing so well. And then there's other things that go on globally, whether it's wars or geopolitical issues that can also impact the economy as well. Next, let's talk about the capital budget. Free cash flow is cash available for capital expenditures or investment after paying for your living expenses and debt obligations. So capital expenditures are usually part of a long-term plan of building your asset base. Investments may also be part of a longer-term plan to build an asset base or achieve a goal such as financing your education or your retirement. Now, a capital expenditure you will likely experience is financing your education. Whether you're going to a trade school, getting an associate's degree, or going for a bachelor's degree, there is a cost involved. Alternatively, if you decided you want to be an entrepreneur and open up your own business, that also has a cost. So either way, you're investing money and time in yourself with the hope that it will pay off in the long run. Using me as an example, my parents didn't save up any money for me to go to college. The expectation was I would get financial aid and get a job. And so I figured I would apply to like the UCs and the CSUs because public colleges were more affordable. But my mom also suggested applying to some private schools, so I did. And ultimately, I didn't get any financial aid for UC or CSU because my parents made too much. But rather, I was offered a full scholarship to the University of San Diego, which is a private school. So for financial reasons, I chose that school because I didn't want to take on loans. That's the only way I wouldn't have been able to go to UC and CSU. But that changed my goals and expectations because originally I wanted to be a civil engineer and go to a UC. So then having to switch to USD, which didn't have a civil engineering, very well-known civil engineering program at the time, I switched to supply chain management, which actually worked out really great. These are the kinds of information and decisions I had to make that changed my goals and dreams and had better outcomes than I could have anticipated. But it all stemmed down to financial concerns. And so when thinking about where you want to go to college and what you can afford and what you have in order to put towards these capital expenditures, which I had nothing at the time, a scholarship was my best option. And the last topic in this chapter is the cash budget. This is an arrangement of budget items into months to highlight cash inflows and outflows. So you can see where your money is going in and out. In the chapter, you'll see an example cash budget that has columns for each month so that you can see where the money is coming in and out. And with that, you'll see the budget variance. So that's the difference between what actually happened and what you had budgeted for. Now, you can also have specialized budgets. So these are budgets that focus on a specific asset or activity. A common one is a tax budget, which shows what incomes, expenses, gains, and losses that have direct tax consequences. For example, when I was consulting, I had multiple income streams, and some years I would get more than others, and planning for that was necessary so I would know what I needed to set aside to pay my taxes each year. I think there was one year I did not do it correctly, and I ended up having like a really high tax bill. So I'm very careful about my tax budgets now. Another specialized budget that you might have experience with or have in the near future would be like a vacation budget, right? So your family or you have a vacation coming up next year, and you'll want to have a specialized budget for that to account for airfare, hotel, car rental, what you're going to spend on food and activities and things like that. So you can have specialized budgets for something as simple as a vacation. Diving just a bit deeper into the budget variance concept. Now, the sooner you recognize a budget variance happens, and in the homework assignment you're going to do this week, hopefully that will help you see them, the sooner you can analyze it and, if necessary, adjust for it. So, for instance, if you drive, you likely have a budget regarding gas for your car, and you'll know how much gas you need based on how much mileage you generally drive and the current price of gas. And so here you can see the budget variance that you might experience in terms of gas money could be tied to quantity. So maybe you're driving more one month for some reason, or maybe the price of gas has changed like we saw in recent months. And so trying to understand where the variance is occurring, because if it turns out to be a quantity issue, then maybe you can find ways to cut back on driving, like carpooling with a friend. Or for instance, if you see there's an increase in price, you can try shopping for cheaper gas. Like I know I tried to get gas at Costco versus some of the other gas stations because Costco tended to be cheaper. Alternatively, you could work extra hours in order to increase your income to accommodate for this larger expense. And then in the long run, as you continue monitoring your gas expense and you notice, I am spending more and more gas consistently every month, and that either could be due to price or quantity or both, then it might make sense for a long-term solution, which would be to buy a more fuel-efficient car. But again, just buying that fuel efficient car doesn't mean you're going to save like all the money on the gas, because fuel efficient cars, hybrids or electric vehicles can sometimes cost more, or, add on a car payment or loan car payment that you now have to account for in addition to saving on gas. Now, as you can see in these lower blocks here under, again, we're just going to use gas as the example. In terms of quantity, there may be micro factors, again, individual characteristics about you that can impact what quantity of gas that you're getting, as well as macro factors, again, the economy, unemployment, and inflation that could impact why the quantity that you are buying is occurring. And then same thing with price, there are micro and macro factors at play that can impact what's going on with price. And so, for example, with the macro factors, there have been supply issues in gas or fuel because of the geopolitical situation around the world, which caused prices to go up. Now, in this week's homework, you're going to go ahead and create a personal budget for yourself, which you do not need to turn in, but you need to write about in this assignment. I'll show you the template in just a moment, as you're going to be filling out budgeted amounts and actual amounts for what you actually spent this month versus like previous months. And so when you click on the blue link, that will download the Excel file for you. And then you're going to answer these questions after you fill out that personal budget. So you can see here in the personal budget, here's the budgeted amount section. Anywhere where you see a dollar or the light gray, that's where you'll fill out. And then you'll also fill in the actual amounts. The dark gray has formulas in it, and it will automatically calculate those for you. So for instance, perhaps my monthly salary that I'm budgeting for or I'm expecting is about $1,000. And maybe I get an allowance from my parents to help pay for some things. Maybe they give me like $50, I don't know, a month. Then go ahead and take a look at this month's actuals. And let's say this month I actually ended up making $950 after taxes. So I'm going to see a variance there. And in terms of the allowance from my parents, yeah, they gave me $50. So that's still the same. So then that you can see what the variance will be for my income streams. And then you'll go ahead and do the same thing for your fixed expenses, if you have any, for your emergency fund and savings, and then for your variable expenses. So these are the ones that tend to fluctuate, but you still want to have like an estimated monthly budget number that you use that you'll put here. If you have other expenses that you want to account for, then you can type in here what that might be. And then make sure, again, put the budget on this side and the actuals on this side, and then you'll be able to see what your expenses are and how much variance you're experiencing. So you'll notice that the questions here ask which item had the biggest variance and why that might be the case. This is really to get you thinking about how much variation might be going on in your life and how can you plan for it, because those are the adjustments that you want to be conservative about so that they're not too drastic either way. And then take a moment to think about if your budget is appropriate for your current life situation, why or why not, and what changes, if any, need to be made. So again, the more aware we are by using tools like a budget, then we can set better goals and plans for the future that we're more likely to achieve.